Hello everyone. Today we'll learn more about accounting standards. So in the previous lecture we had learned about the meaning of accounting standards, who had given the definition, uh, who establishes formulates the accounting standards in India as well as foreign country. So today we'll learn about Indian accounting standards. Okay, so that is basically IAS. Okay, before that I would like to uh, give you all a revision of what we had learned about Indian accounting standards. So Indian accounting standards are in India, and these are the standards of accounting. They are formulated by ICAI, that is Institution of Chartered Accountants of India. Okay, and they had formed established Accounting Standards Board when on 21st April 1977. Okay, now what Accounting Standards Board does is it formulates accounting standards, and who advises the Accounting Standards Board and who approves the accounting standards. So it is Council of the Institute of India. Okay, so this was what we had learned in the previous lecture. Now today we'll learn about the different accounting standards that are in India. Now there are in all 41 accounting standards. Okay, but we'll be learning only a few of them. So there 41 accounting standards. We are going to learn AS1, that is accounting standard 1, AS2, AS3, AS6, AS8, AS9, AS10, 11, 12, 13 and 22. Okay. So the first one is disclosure of accounting policies. This is described in AS1. Okay, so we had learned in the principles or the conventions that you have to always disclose the information, correct information. So that is all that is given in this accounting standard. Okay, you have to disclose your proper and true accounting information. Okay, there should be no fraud, there should be less errors. Okay, then AS2, valuation of inventories. Now, what are inventories? Inventories are the raw materials that a company or a factory purchases for manufacturing production of goods. Okay, so these are the raw materials. For example, there's a company which produces clothes. So, what will be their raw material? It will be cotton. Okay, so this accounting standard is basically for that cotton or the raw materials that are used in various industries. Okay, so you have to value that, that is you have to find out their cost. Okay, now historical cost we are not finding here, that is the price at which we are bought the cost, the raw material, that cost we are not considering here, we are considering the current day price. Okay, then third one is AS3 describes cash flow statements. So what are cash flow statements? It is we have learned in previous lectures what is cash flow statement. So it is what we receive, what we give. Okay, input, output. So this cash flow statement is all about how to prepare a cash flow statement, what should be the procedure, how should it look like, the format, everything is described in AS3. AS6 describes depreciation accounting. Now what is depreciation? Now for example, say you have an asset, say for example machinery. So machinery, whatever condition you had bought it in, it will be the condition of the machinery be same today? No, right? Okay, so that time it is to give you production of 10,000 units, but today it gives you only production of 8,000 units. So 2,000 ka there is depreciation. So how to record this depreciation, that we are learning in this AS6. Now AS8 is for accounting for research and development. Now from previous years, like centuries, we have developed a lot. Okay, so first they used to eat raw meat and all. Okay, now today in today's era we cook the food. Okay, they used to burn the fire by rubbing the rocks on each other. But today, how do we fire something? We use a matchstick or we use a lighter if we want to light a stove. So similarly, in accounting also there are many researches taken place. Okay, there are many developments taking place in today's era as well, in accounting as well. Okay, so how do you record that accounting? How do you account those researches and development? How do you write those in your books of accounts? Okay, the cost that you have incurred. Then AS9, revenue recognition. So there are various sources of income. Say you have salary, you have some investments, from there you earn interest, you earn dividend. So there are many sources of earning revenue. So to recognize that revenue, recognize that income, this accounting standard is required. Then there is AS10. So accounting for fixed assets. Now what are the fixed assets? I have told you already in the previous lectures that fixed assets are those assets that are there for long term with you and it gives you benefit. Even if not immediately today, it gives you benefit for long term in the long period. Okay. So if you buy a machinery, that machinery will not immediately start giving you benefits today, but around the time, okay, as you proceed further with your business, okay, you will recognize how that machinery is giving you the benefits. Okay, your production will increase, it will be of better quality and everything. So how to account these fixed assets? Okay, when you purchase them, when you use that fixed asset, when you sell them, everything is there described in AS10. AS11, it is changes in foreign exchange rates. Okay, now there are companies who not only work in national country. Okay, so there are companies who don't only work in India, but they are trading in foreign countries as well. That is known as imports. If you are buying from foreign country, okay, there are exports if you are selling in foreign countries. So uh, uh, now you all know that there rupees in India and the dollar in US, they both are different. They both value at different rates. So every day this changes take place. Okay, today the rupee is 80 dollars. Okay, but tomorrow it will be $82. Then day after tomorrow, suddenly it may hype up to $90. Then there will be decrease, it will turn it will convert into $85. So every time these changes take place, so these changes, how do you account for this? Okay, with these changes, how do you import or export your goods and services? How do you record this in your books of accounts? Everything is described in AS11. AS12 says about accounting for government grants. Now, what are grants? These are the fees that you get or the financial help that you get from the government. Okay, so whenever you get a grant from the government for your production of goods, suppose you are providing a service, for example, say CSR. Okay, so how do you record that government grants in your books of accounts? Then AS13 is for investments. Now what are investments? I have some money left with me, I want to increase that money. Okay, so I have 10,000, I want it to increase a bit to say 11,000. So what I do, I invest it in a company. Okay, in equity shares or preference shares or wherever I want to. Okay, I will analyze where I want to keep my money. Okay, where I will get more returns, accordingly I will invest that. Okay, so how do I calculate my investments? Okay, how many rupees I had invested, how many rupees are there for expenses? Okay, so of course there are some expenses. In this I need some documentations and all. If I sell the shares or my investments tomorrow, then there are some profit losses that take place. So everything is explained in detail in this accounting standard 13. And the last we are going to learn for today is AS22. Okay, this is accounting for taxes on income. Now, what are taxes? Government takes tax from every citizen of India. Okay, provided that a person who is who is earning income is above 18 years old. Okay, and that person is earning from some source. Okay, so these taxes are earned on income, right? That is known as income tax. So this income tax, how do you record it in your books of accounts? How a company records it or a business organization records it in its books of accounts is described in this accounting standard. So that's all for today. We'll stop for today. Thanks for watching the video. Please like, share and subscribe.